What do you make of the violent reaction that we've had to good news? Micron had good news. It's been down ever since. Samsung, amazing news. One of the best quarters in history. It's down. It's frustrating for a lot of people watching the show.
Yeah, so I think if you look at Q2 and year to date in particular, the biggest beneficiaries this year from a price action standpoint have been the beneficiaries of all the AI CapEx spending, right? And so what you saw is them get overextended. I like to use the term hockey stick.
How do you judge that? So let's say a Micron trading with a single-digit PE ratio. How can normally Wall Street says that's a good thing? Why is it extended? Because it's come so far so fast?
So far, so fast. So the term is hockey stick or a parabolic move where you basically have almost a straight up move in the stock. It got overextended. A lot of the sectors got overextended. And all you're seeing is a healthy froth eliminating pullback right now.
Let me put this first chart back down for a moment, though, because this is just one estimate. There's a lot of estimates out there about how much is going to be spent. So 2026 and 2031, 7.6 trillion with the T dollars. So the move in the stocks have been parabolic, but some argue that the fundamentals have actually even been more parabolic and probably are still positioned to be so.
Oh yeah, I would not disagree with that. In our private market strategies, some of our best performers have been linked to this AI infrastructure spending as well. We've never seen companies grow revenue and earnings this fast and have multiple compressions.
The question is just how long they can keep doing it.
Yeah.
So let's talk about this rotation, because one thing I don't think folks understand, this is concentration, folks. Everyone in the same thing. We're at record concentration right now, so this is beginning to unwind, and that's kind of good news for the rest of the market.
Yeah, well, that's where you're seeing rotation into other sectors like financials, you mentioned before, other areas that have underperformed. However, it's hard to get sustained bull market price action going forward without leadership from tech, because that's where the best revenue and earnings growth is, just like we've seen in private markets as well.
So then let's talk about the risk right now, some of the risks that you see. One is certainly slowing spending, AI spending, and of course the irony there is maybe slower spending means maybe the Mag 7 do better. I mean, and they can mask an overall bear market, just those 7 names, if they start to rally.
Yeah, so spends are pretty much set for 27 now.
Right.
They're not going to change. The question is, if you get into 27 and you don't have enough of a return on invested capital in the AI spends, and the hyperscalers decide to pull back. So that would be harmful to chip stocks.
It would be almost, though, akin to running a marathon and at mile 23 say, okay, this is too long, right? I mean, it'd be a little bit late at that stage of the game. They'd say, okay, we're going to throw in the towel.
Yeah, but the point is...
But if they did, though, it would be bad.
Yeah, bad for certain sectors of the market. To your point, for the hyperscalers, life would go on because some of their free cash flow would be redirected back to shareholders instead of these big spends. So that's risk number one. And then risk number two, which fortunately with the reduction of violence in the Gulf, is the 10-year Treasury yield backing up substantially.
Right, but we're okay. We're kind of maybe past that point.
The risk is less acute now, for sure.
So many economic tailwinds. You like spending, particularly defense and technology.
Yeah, I mean, it's really unusual where you have these two twin tailwinds. One has been with us the last several years. Another is getting cranked up as we speak. And oftentimes we find the best investments where we could get locked into those trends early on, whether it's in public or private markets.
President Trump at NATO right now, of course, he's pushing them to spend more, to buy more of our defense. We just, saw what happened with the Russia-Ukraine. The drones have changed everything. This is one probably embedded trend that should be in place for a long time.
Yeah, and the numbers are staggering. And you talked about AI spending going up to 1.2 trillion to 1.3 trillion next year. There's the potential for us to spend $500 billion more on defense if we can afford it, which is debatable. But that's massive levels of spending that should drive growth on top of a consumer that's still in a much better shape than many would point out.
Let's talk about economic outlook. In addition to this spending that you like, productivity, I guess, is the one that everyone's kind of debating right now. Certainly listening to the new Fed chair, he's embracing AI big time. He thinks it's going to be disinflationary. I guess the argument is when, because a lot of folks are saying we haven't gotten the productivity promise just yet.
Yeah, so the only data we have is that roughly 80 basis points of enhanced productivity growth may be caused by AI, but we don't know yet. However, when you think of the productivity that should come, we move from 1.5 to 2.5 to maybe 3% productivity growth. that can unleash a really profitable wave for corporate America and lead to very attractive GDP growth without inflationary pressures, which no guarantees, but it looks much more likely today than 3 years ago.
Right, and yes, I'm on the same page as you. I just brought up Kevin Warsh. Where are you in that camp with it? Kevin Warsh. The street has deemed him to be more hawkish than he thought. I don't read it that way. I don't think there'll be any rate hikes this year. But what are you looking at?
Yeah, we're not going to have hikes.
Okay.
That was a bad idea. Higher oil prices, you should never hike into high oil prices because they're actually disinflationary because they steal demand from other sectors of the economy. The question is how fast they can cut from here. Hopefully we can get through the next 2 or 3 meetings. Oil prices have come down, disinflationary forces reassert themselves, and they can start to cut either later this year or early next year.
Great stuff, Troy.
Yeah. Great
Thanks
to
a lot.
see you,
Appreciate
Charles.
you, man. You're looking good, by the way. You never age, do you?
You don't either, man.
All right, folks. Now my next guest says sector returns in the first half